We've all had a chance now to enjoy an afternoon at the NVIDIA roller coaster park. While it has initially moved up a little bit, as soon as the earnings came out, strong flush down. It's recovered from those lows, almost got back to 124, but then it started to move back down again. Now, today's video, we're not going to guess which direction it goes. I will give you some important technicals on NVIDIA. There was an expected move in the options of at least a 10% directional move one way or the other. We've already gotten with the flash down a negative 7% move, but it doesn't really matter which direction this goes. It affects our portfolio, but today's video is going to be to give you guys some guidance on the overall market. So even if this thing went absolutely gangbusters up here in the next couple minutes or the next hour, I want you to have some bearish indicators that would probably be telling us that institutional money would absolutely sell into that strength, because there's three charts that you have to lay your eyes on that are extremely ominous. They're huge sell signals. Now, that doesn't mean that the markets can't move higher. We've got a Fed cut coming, and many could interpret that as a bullish moment initially. But the fact is that these markets have been giving some bearish signals, and I'm going to go over the three of them. They're huge warnings, and no matter what, whether we get weakness, if we get weakness, then we know that we should have expected that. If we get strength, then it's going to be a video about reminding you about taking profits on an extremely hot market that will not remain hot forever. This is the Stocks with Josh show. Thank you for joining me. Thank you for the likes. Thank you for dropping a heart and saying hi in the comments. If you're new to the page, I think you're going to enjoy the overview that I give today, because you should leave better informed about what's really happening behind the scenes on Wall Street after I lay out these important bearish indicators for you. Guys, we've got to get prepared, not scared, as Keenan says. And on the point of Keenan Grace, I'm going to be over on his page reacting to NVIDIA's earnings tonight with the Stock Squad at 7 p.m. Eastern Time. Make sure you come over there and join us. Hit that like and subscribe. Let's dive into these important indicators. Well, you guys hear his name, doesn't need any introduction. Mr. Warren Buffett has given a classic indicator. We all know that he's stockpiling cash as we speak, selling into strength. And we know that he has more money than he's ever had before. And I want to show you guys this chart. It's a very important indicator for Wall Street. And let's go and check it out. And I'm going to break it down for you. All right, guys, we're looking at the Buffett indicator. This is the market cap to GDP. And it basically tells you how much value there is in the S&P 500 over the current GDP of the United States. And what I want to point out to you is right here in 2021, we hit a high of 194%. That meant that stocks were valued at 194% over the GDP. And today, as you can see, the total U.S. stock market value is $57 trillion compared to the annualized GDP of $28 trillion, which means that the Buffett indicator is now above 200%. Warren Buffett believes that Wall Street is way overvalued right now. And like you just saw in that chart, we are now 200% above the annualized GDP. And if you don't know what that is, that's the gross domestic product. And if you don't know what that is, that represents every single bit of labor and every single value, service, and product that we create in this country. It's our collective gross worth. And what that simply means is that stocks are suggesting that we are worth more than we really are compared to what we're actually doing, which is the GDP. And right now we've hit a record level, higher than we did in 2021, right before the terrible 2022 sell-off year. And there's a lot of reason to take concern, because Wall Street's looking at that indicator. Wall Street is watching, and what are they going to do? They're going to take risk off. Are you going to put fresh money into Wall Street if the market's at all-time highs? You're going to have some investments, right? You want to show your clients that you are in the market, but you're going to be taking profits. You have to show your clients that you're investing money for, especially if there's a downturn ahead. You have to show them that you took profits. Now we're getting ready to go into September, and that's a month in which there is a ton of profit taking and reorganization to try to get the most value out of the year for shareholders. They want to lock in the gains. All of the gains came largely in the first 6 months of this year. So now it's all about getting positioned and showing how they responded and reacted to a very expensive market, and they can't wait to do that. Now, the momentum traders, which largely represents the retail traders, they're buying and going risk on while institutional money is going risk off. And so I'm going to repeat myself. Even if NVIDIA takes off like a rocket ship, you need to be aware that it can hit new highs, but Wall Street's very likely going to be selling into that strength. All right, now this next chart is going to be a commentary on how expensive NVIDIA is. And what I want you to take away from this is even if NVIDIA somehow goes up from here, it's already very pricey. And this is going to be our price to sales ratio. Now, I did not prepare this chart, but it simply shows you how expensive NVIDIA is compared to its peers. Microsoft and Apple never got anywhere near 40 times sales. But of course, you're going to have the perma bull momentum traders. Remember, the momentum traders are always looking for the strongest stocks that are going to push higher. Now, we did enjoy a massive run up on NVIDIA, but I traded it with the same way that smart money and institutional money was trading it, which was simply to go risk off going into earnings. I raised my stop loss yesterday to 124.40, and I resigned myself to the fate that if it came back and kicked me out, I would have to let it go. Now, you guys would know that if you're part of the Stocks with Josh Discord, the Chart Goat University. We've traded NVIDIA all the way from $96 and $94 all the way up to $124.40. That was a 31% profit, and the options yielded. I did long options, leap options into 2025, and those yielded a 43% return. I got out of both of them, and right before close, I entered a spread. I bought calls and puts to take advantage of the movement either way. And what that's going to look like, guys, is tomorrow morning, if this ultimately ends down, I'm going to be looking at cashing out the calls and riding the puts lower. The calls will be at a complete loss or mostly a loss, but the puts should just be the beginning of the move. All right, let's get into the remaining two indicators that you need to be aware of right now because they are pretty ominous. And with NVIDIA's stock price falling so far, we need to be prepared going into tomorrow and what to expect from Wall Street because Wall Street is aware of these three charts. I'm going to go into the next one. Now, the next one you've heard a lot about is the 10-year to 2-year yield curve. Now, here's what you need to know today about it, is that these move away from each other and it creates the inversion, but you know when the recession is at hand when they begin to move back towards each other. And these are extremely close today to being uninverted. And when that happens, it typically signals that recession is right at the door. What does it mean for recession to be right at the door? Does it mean that everything is just going to fall to crap tomorrow? No. Recession could still be, the drop-off, the sell-off could still be 30 days away. But this whole video today is about taking a big step back and looking at the big picture and just reminding you, it does not matter what happens to NVIDIA. We've gone through the process of the inverted yield curve, uninverting, and that is a point in time in which Wall Street's watching for the markets to then move to recession. So if everyone's watching this the way that I am and we are tonight, then it should be a pretty ominous warning about reorganization of your portfolio or at least hedging your positions right now because that 10 to 2-year yield curve is uninverting. Now, the last indicator that I want you to see is the SOM rule indicator. This was created by Claudius SOM, and it also, like the inverted yield curve, has a 100% accuracy rating, which means that this has been examined and it has never failed. What are the dynamics of it? Well, the rule states that a recession is underway when the 3-month average unemployment rate increases by 0.5% or more from its lowest point in the previous 12 months. The rule is widely recognized for its simplicity and accuracy, and it is intended to identify the start of a recession more quicker than any other indicator. But here's the thing that you need to know is that we've signaled the SOM rule. And so this is another indicator that the bears are watching and getting more and more confident right now. So I'm going to repeat myself. I don't know how things will end with NVIDIA. Okay. It does not matter if NVIDIA skyrockets from here. I just gave you 3 bearish indicators that you need to respond to. You need to take a position and consider, how do these indicators impact my investing and my decision making right now? How do they impact me? Well, as I'm not an institutional investor, but maybe I am a smart money investor, and I took risk off going into earnings because I had already gotten a wonderful entry a couple of weeks back when I alerted it on this show and in the Stocks with Josh Discord. And so I already had more to lose than potentially gain. And so I went risk off. Everyone was notified. And here's the beauty of it. Tomorrow we can double down on puts if that's the way the market ultimately chooses direction, or calls tomorrow morning, because we did a strangle. Basically, it means I bought calls and puts, and I'm going to jump on whichever one is the winning position tomorrow. Guys, ultimately, I chose to go risk off before earnings because the market lacked momentum going into today. And I knew that if we came back and tested that 124.40 on NVIDIA again, it would be problematic. If you remember in yesterday's video, I talked about a SWAT team hitting the door too many times. I said it hits it once, it might not open the door. Hits it twice, it's going to rattle the door. If it hits it a third time, that door is coming straight down. What was the door? Well, it was the support line of $124. And I knew that if we hit it one more time, we were going to get a flush. And that's what's played out. But again, doesn't matter to me if these markets go bullish tomorrow. Based on the indicators I just gave you, we all need to be more cautious and go risk off until the charts give us greater direction. Guys, you're going to catch me tonight here in a couple hours with the Stock Squad. I think it's going to be a great and interesting conversation. I'll expand more on these ideas then and what risk positions I'm looking at for tomorrow morning. It's going to be an interesting trade week. Some people just didn't trade today. Okay, so that's always an option. Cash is a position. Let me repeat that. Cash is a position. Largely, I didn't trade. I did in the live trading that I do. We did enter a call and put spread, puts confirmed, but then I got out of them too early. So, you always want to examine each of your trades and what mistakes you might have made so that tomorrow you can do better. Don't get discouraged by a loss. And I can tell you a lot of you guys are going to be dealing with one of the other disciplines that I often talk about, which is revenge trading or over trading after a loss. I don't have any anxiety because all that happened today for me with NVIDIA is I cashed out a monumental swing trade on the shares and a beautiful profit on the options. And now I'm all cashed up and I'm ready to take some positions tomorrow based on what the market shows me. That's how we played it. That's how it rolled today with the Stocks with Josh fam. I hope you guys made some money. Let me know in the chat how you think NVIDIA is going to end the day and how it's going to start tomorrow. I'd love to hear from you. Appreciate each and every one of you. Hit the like and subscribe and come check us out in the Stocks with Josh Discord. Tomorrow I'm going to be dropping a micro class on volume. Should be very interesting. Volume is a very important indicator to make investment decisions. And I think you guys will love it. Come and check it out. Peace and blessings. Talk to you soon.